morning, speculators, and welcome back to the channel once again. I was going through this chart a couple of weeks ago, sort of deciding what I wanted to do for my next video, and I decided to go with Cardinal Resources, so I'll be talking about them today. And the reason being is because they've had a lot of things happen in the past couple of months. If you watch this channel, you know that I hold West African Resources, and they've successfully built their mine Sembrado and are now operating in Burkina Faso. Cardinal Resources has been on the same sort of tier as for me anyway, as West African Resources. So both companies I've known for just as long as each other. I actually held Cardinal before I held West African Resources. Bought in at I think it was about 15 cents back in 2016 and rode them all the way up to about 70 cents. I didn't have a big holding in them, but I sold out when they discovered Namdini, and I bought into West African Resources and rode that one for a couple of years and bought in a few others and did keep watch of Cardinal Resources. They released their DFS in 2019, at the back end of 2019, and since then I've come back into the stock. Been focusing on it a lot since then, because you don't get what these guys have very often. 5.1 million ounces in reserves, $200 million market cap, 41 cents at the moment. So very, very undervalued, very, very undervalued company, and a well-known producer's just bought in to the company as well a couple of months ago. So I thought I'd do a video on them and explain why I bought in and why I'm holding and what I'm holding for. So I bought in during the I think it was during the period of where I bought in about 24.4 cents, which was when I first bought in, and that was in the March period when the virus was sort of still raging on and everything was shut down. Stocks all got plummeted down to the to bottom virtually, and I saw the opportunity, so I brought in. And since then I've been holding. I sold some. I think I sold some at where was it? It was about 35 or something like that. Not a lot of my holding, but some of it. And then a couple of days ago, I recently just bought back in. So they discovered they've did the DFS back around this time. They released it. I think it was September. And obviously you can see that's where it sort of topped out at 55 cents. And since then it's been on a bit of a decline. And a bit of the love went out of this stock because they've got to raise capital, equity and debt funding to build a mine, or they get taken over. So there's one or the other happens, and if one of them happens, generally the equity is raised at a lower share price, so a lot of spectators generally leave, and or some stay and lower their average, hoping that a takeover will eventuate in the near future. So basically 24 cents happened, I bought in, and then 2 days later they got Nordgold bought into them for about 20% of the company's shares, and 16% of those shares were bought from Goldfields, which is another big name in the gold mining industry. So that's that. So I'll just run through a few of these. There's not really much speculation to be had on this stock. We're sort of at the end game now. It is the last dance for Cardinal Resources at the moment, and I think within the next 6 months a decision will be made to either go it alone or they'll be bought out, and I think they'll be bought out, and this is sort of why. So I'll go through a bit of the company. So the ASX code is CDV. Shares on issue just under 500 million. It's about a $200 million market cap, thereabouts. Share price, I think today is about 42 cents. It got up to 43 this morning on open. Cash on hand as of the March quarter, I'm not sure if that was end of March quarter or during the March quarter, it was about $20 million. Since then, they've had a number of things happen, but I'll talk about those in a second later in the video. So Archie is the managing director. He's been in Ghana for 20 odd years, has extremely good relationships with obviously the government, and I think the latest announcement really shows that, and I'll go through that at the end of this video as well. Like I said, he's been involved in many activities around West Africa, many gold discoveries. You can read that at your own leisure if you wish. Namdini, so the discovery timelines: first drill hole 2014, discovery declared in 2015, and this was the area that I bought it, or around the year that I bought it was 2015. And as I said, I wrote it up to about 70 cents. I didn't have that much money in it. Obviously I wish I had more money in it back then, but it was a good little specky to have back then, because no matter how much money you had in it, it did really well within that year. It got to its all-time high as a 70 cents or 75 or 80 cents thereabouts. So the pre-feasibility study 2018 for just under 5 million ounces in ore reserve, and feasibility study just over 5.1 million ounces in reserves. They've scheduled gold production for 2022. That depended on finance the first half of this year. So really they've got 3 weeks to find finance if they want to meet that target. But I don't think they are going to produce Namdini on their own. I think they'll either be bought out or they'll go into some sort of agreement, maybe a JV agreement with someone, similar to what Gold Road has done with Goldfields. So here we are in Ghana, West Africa. So as you can see, the Namdini project is up here, close to the river, close to the main road. I think the power supply is only about 75, it might be about 50 k's away or so, maybe even closer. I'm not 100% sure. But if you wish, you can read the feasibility study, and it gives all the finer details in there. So as you can see, at the bottom of Ghana, you've got Anglo Gold Ashanti, Newmont, Kinross, Resolute, Perseus, and Goldfields. You've got a lot of big producers, and Ghana is generally, as I've come to learn myself, it's probably one of the better countries to operate in, to be a gold producer in West Africa. So fairly secure government, and as I said, I'll go through the last announcement for you as well. So 2019 feasibility study highlights, and my own points as well, 5.1 million ounces in reserve. It is very, very hard to find a development company that has that, and because of this point in particular is one of the main reasons I have shares in this company. Highly sought after, 5.1 million ounces in reserves. It's, there are a lot of gold projects that are overvalued, when it comes to how much reserves they have, and this company, is well and truly undervalued. So they they're projected to do 421,000 ounces in the first 12 months, 1.1 million ounces forecasted for production within the first 3 years of the mine life. So the life of mine, 15 years. So it'll be 1.4 billion in undiscounted pre-tax free cash flow, based on, I think it was the 1350 per ounce of gold. Obviously the gold price has moved up quite a lot since then. Based on that gold price, their capex payback was of 21 months, and it goes to 12 months at $1,500 US per ounce. So it's as the price of gold goes up, this project is highly attractive, not just to individual investors, but also companies. And I think that's why Nord Gold have bought in, because they generally look for projects that, have 2 million ounces plus in reserves and can be paid back fairly rapidly. The best part about this is that it's just all open pit. There's no underground, so it's straightforward mining, open pit, and the low all-in sustaining cost during the capex payback is about $585 per ounce, and that's due to the starter pit. The low strip ratio. Just under one ton of waste ore for 1 ton of gold ore, so doing very well. The life of mine, basically 2-to-1 strip ratio, so very good numbers. The life of mine all-in sustaining costs after the starter pit goes away, 895 per ounce. So it's $100+ up since the PFS, which is a bit of a shame, but it's still fairly low cost in my opinion. And the real ticker for this company is, like I said, the 5 million ounce deposit, because a lot of companies don't have that in reserves, and a lot of the ones that don't even have an indicated resource are a lot higher than what their market cap should be. So this company is definitely, has a future for it. Something will definitely happen in the next 6 months. So 420,000 ounces in the first year at 1,700, assuming no hedging, will generate over $700 million in cash flow. Half that will be in free cash. So, they're looking at like maybe just under 9 months payback, maybe a bit more, and that is including the contingency fee along with the capex as well. So, which I think is about 43 million. First gold pour, as I said, targeted for second half of 2022. I think they've changed that in their latest announcement to 2023. It's subject to financing the first half of this year. Obviously, that's looking, due to recent events, I think if they do finance, it will be with a JV partner. It'll be a 50-50 project like Gold Road did with Goldfields. I can't see them going at it alone. It's a 9.5 million ton per annum plant. It's a fairly basic plant design, but as I said, I think that it's still quite a lot of capex for an exploration company or a development company to jump straight into. I mean, West Africa was able to do it because I think their capex costs are about 190 million. US, and they actually did it under budget as well. So, but when you've got 348 million, plus the 42 million, as well, it starts to get a bit too much for a junior company. So the Namdini project net present value and internal rate of return. As you can see, post-tax and pre-tax. So obviously post-tax, it's still a really, really good number. And this is based on the $1,350 per ounce. So you add in the gold price, the US dollar gold price of what we have today, and you see that this project the value grows every time the gold price goes up. And that's another one of the reasons I bought in, because it's, the numbers are there. It makes great money. Even at the all-in sustaining cost, the strip ratio is very low. The project's huge. Life of mine of 15 years. You don't find projects like that very often. So I've been through all that. So the recovery's 85%. So a bit of a story, and I'll try to find it. I think it was. Where it is. So, yeah. So you can see this. You can see, a bit of a drop off in price. So I bought in at I think it was like 15. I said so. It was around around this area. It was very, very low. Where was it? It was back around there somewhere. But anyway, I bought in. I don't know if I can go back further. I think this is it. But anyway, they rode up to 70 cents, and I sold out of them. And then after that, the metallurgy and recoveries came back. I think they were 73% or 75%. So not the best, but over time they worked on that, and they got recoveries of 85% for the first 3 years, 83 gold recoveries for the life of mine. So it's still over that 80%, and generally you want over 80%. You know, the higher the better, really. West Africa's recoveries, just as announced this morning, 91% recoveries. If you get really, really high grade as well, that ends up being a very, very good result too. So still decent, but you know, the size of the size of the mine, the mine life, the starter pit costs, the fact that gold's at 1,700 per ounce is another reason why this project is highly undervalued and has a very, very good future for it. So here's just some of the general things I've spoken about, and you can read this at your own leisure, as I've said. And there's the production and life of mine all sustaining costs. So this is the forecasts for the open pit, sort of the schedule of what they hope to achieve. So as you can see, a lot of years, over 300,000 ounces. So it's a big mine, it's a big deposit. It's going to make a lot of money eventually when things get underway, and looking forward to seeing what happens. So in early 2019, the company Cardinal Resources commenced project finance discussions with a number of Australian and international banking groups, from which the company received a number of preliminary non-binding financing term sheets. So this has been happening since the 2019 mark. They said that they were going to do early site works with the 27 million Australian that they had in cash back in that time. Obviously, a lot of things have happened now. I don't think this company ever wanted to mine this project themselves. I think that everybody's goal is to become a producer, but you know, when you're talking about a deposit as big as this, and also the fact that Gold Fields bought in, it's very difficult to raise capital and build the mine on your own when the capex is it's fairly low, but it's still a lot of money to raise. So they haven't spent any money on early works, and as far as I know, no early works have been done at Namdini, whereas obviously West Africa was quick to jump on the gun. They did early works but even before they got financing, and financing decisions they're still being discussed at the moment. So they had a strong cash position then. They still have a strong cash position now, but things have changed. So this is the project financial model, and this was out of one of the recent announcements. So as you can see, as the gold price goes up, it's now at 1,700 US. The dynamics of the project drastically change. So as I said, 9 months or less to pay back the capex. So very, very high quality project, especially at high gold prices. So Nord Gold. So as I mentioned earlier, Nord Gold bought into Cardinal. 16% of the shares that Gold Fields had, Nord Gold bought off them, and it was for about 43 or 46 cents they bought off Gold Fields. So Nord Gold is a producing company with projects in West Africa, Kazakhstan, and Russia. They operate 10 mines in 4 different countries. Majority of their mines are in Russia. They're a 1 million ounce producer. They're a private gold producer, which means they're not enlisted on the ASX, TSX, or any stock exchange of that sort. Annual turnover 1.4 billion, which was, I think, the year just gone in 2019. They have over 300 million shares, ordinary shares in the company. They really are a well-renowned company. The 3 major shareholders, they own pretty much majority of the company. Russian billionaires, and his sons as well. And you can read all this at your own leisure if you wish. So they've created shareholder value through organic growth, which is what a lot of companies do. Some companies do it better than others. But it says here, and this was the main point that I got out of it, the company also seeks growth through acquisitions and partners in high-value gold projects, projects in mining-friendly jurisdictions with over 2 million ounces. So as you can see, Ghana is already a great jurisdiction to mine. A lot of other companies, as I said before, mine there, and obviously Nord Gold took a big stake in Cardinal because they want to be involved in projects there, and well, ultimately probably want to take Cardinal out and mine Cardinal themselves. So they look for a production above 150,000 ounces per year, 2 million ounces in reserves. This is what these companies look for, and as I said, this is why it is so important to know the value of a company based on what they have, in their studies and also in resources. So if you're doing that, it is a speculative play, and it's good to go where the value is, especially in the market we're coming up to now, which is why I sold some of my other shares and bought more into Cardinal Resources. So they look for a short payback period, and look, with Cardinal Resources, 1700 US dollars per ounce. There's no wonder why they're knocking on the door of Cardinal now. So here's just a list of their probable reserves, and this is for Nord Gold. As you can see, it actually sort of goes back to front here. So December 2014 all the way to December 2017. No matter what they use in their mines, they grow in their resources. So each year, consistently, 1 million ounces or just under. And that's what they aim to do, organic growth, grow the reserves of the company. If this company did trade publicly, it would probably be in the ballpark figure of maybe over $15 Canadian. So, they are a brilliant company, and they do want to grow their company even as they deplete their resources. And Cardinal is, 5 million ounces in reserves added to Nord Gold is a it's a big thing for Nord Gold to get that ounces, especially since it's in reserves. So 16th of March 2020, Nord Gold currently own just 20% of shares in Cardinal Resources. The acquisition, as I said earlier, was at a price of 43 cents. 43 cents per share. 16% or just over 16% of Cardinal shares were acquired from Goldfields at just under 46 cents a share. So no formal offer is yet to be made, but it is assumed that Nord Gold wanted to buy all of Cardinal shares for 46 cents. And, they're going through the due diligence process now. And that's been happening for about almost 3 months now, coming up to about 3 months. So I've heard on the grapevine that decisions are being made. Both parties are trying to come to terms on a price, and I think that at the very least they'll get 46 cents for their shares, hence the reason why I've bought in more. I look forward to seeing what happens with that, obviously, in the future, but I can't see Cardinal going at this alone. I think that eventually a deal will be made, and if not, maybe another buyer might come in and start doing a bidding war, but for the most part, 46 cents just isn't going to cut it on 5.1 million ounces in reserves. It's too big of a deposit. So 5th of June, Cardinal debt purchased by Ghana Infrastructure Investment Fund from Sprott. So Cardinal Resources had a debt, quite a bit of debt through Sprott, but the local government in Ghana have bought that debt off Cardinal from Sprott. So it sort of gives Cardinal a bit more breathing room now, keeps a bit more money in their bank. While they figure out, the terms of agreement with what's going on with Nord Gold, which is good because if they were depleting their cash, the share price would get lower, and Nord Gold would just starve them out. That's what these predators do; they starve the juniors out. So, for the government to come in and help Cardinal Resources out, that is a major thumbs up in my book, and another one of the reasons why I bought in. But I actually bought in before that happened. But it's good to see that the government is supporting Archie and his team. So why I like Cardinal Resources, Obviously, I've mentioned a lot of these in the video just before, but 5.1 million ounces in reserve. Namdini is one of the newest and largest deposits in West Africa. Starter pit costs of $585 per ounce, plus the capex payback, in 9 months, based on these, $1,700 per ounce gold prices US. Open pit deposit, so it's not anything too difficult. It's just straight standard deposit of open pit mining. And the sixth reason is because Goldfields and Nordgold. Goldfields is another big name in the gold sector. They bought into Cardinal, a big stake, pretty much as the deposit was being discovered. And Goldfields have a lot of other projects going on at the moment, but they sold out to Nord. So the fact that it's exchanging producers' hands constantly just says that this project is of high quality to other companies, other producers in the industry, and that there's a good chance that something will happen in the near future. So that'll be it for today's video, guys. I hope you enjoyed. Thanks for coming and watching the channel again. If you're new, please like and subscribe for more content. And thank you very much. I'll see you next time.